CEO Alex Karp just made headlines. He did something huge and you'll miss out if you don't act fast. This is a very short window of opportunity. With earnings coming next week, you don't want to miss this. This is a bombshell of an update and will make millionaires. But what am I even talking about? Well, let me explain. Disclaimer. CEO Alex Karp just proposed recently that he's selling around 1.7 million of his Palantir shares. This insider selling could send several messages to the public, and this will surely have an impact on Palantir's price. But this, combined with the upcoming earnings report from Palantir, could be an opportunity lurking. Not everyone knows about what this is. So stay tuned and let's get into it. Alex Karp plans to sell a part of Palantir's common stock. This sale is valued at around $75 million. But this isn't something new. Since August 20th, 2024, Karp has reduced his shareholding in Palantir by almost 10 million shares. And here's what you need to remember. In the past, insider sales like this have created a negative image for Palantir. Many investors saw it as a bad sign and rushed to sell their shares. However, when people realized that these sales were pre-planned and not the result of bad news from within the company, the stock price stabilized. Those who panicked and sold their shares early might have missed out on Palantir's recovery. These insider sales are scheduled transactions, not sudden reactions. Although the initial news of Karp selling shares may seem alarming, it doesn't reflect any significant issues with Palantir's business. Once investors understand this pattern, they usually stop worrying about a negative impact on the stock price. In fact, Palantir has bounced back in similar situations, leaving those who sold their shares too early with possibly little to no gains. But here's what's even more exciting about all this. With Alex Karp selling some of his shares, it opens a unique opportunity for investors. And you might not want to miss this out. Both current Palantir holders and those who haven't invested yet can use this chance to add Palantir shares to their portfolios. The insider sale doesn't reflect any internal issues, making this a potential buying moment. At the same time, the biggest AI-related patent lawsuit in Europe is now unfolding. A publicly traded German company, which previously sued Microsoft, is seeking an injunction against one of NVIDIA's product lines in 18 European countries. This is the largest AI patent lawsuit in Europe so far. As NVIDIA faces this major legal challenge, it could shift investor attention toward other tech companies. And here's why this is important. Since Palantir operates in the same AI-driven industry, some buyers might look to Palantir as a safer option. While NVIDIA is dealing with this lawsuit, Palantir continues its steady growth in the AI and tech space. Investors may see this as a better opportunity, especially if concerns about the lawsuit's outcome affect confidence in NVIDIA. This situation could benefit Palantir, as buyers might look for alternatives in the same industry. Palantir's strong position in AI could attract those looking to avoid potential risks tied to NVIDIA's current legal battle. However, these are all still just speculations, and you need to do your research before you actually do anything. But if one is going to speculate even deeper, given all these updates, there could be something bigger at play. Hear this out. The timing of Palantir's upcoming earnings report, along with Alex Karp selling some of his shares, may not be a coincidence. It could be a strategic move by the CEO. By letting go of some shares just before the earnings announcement, Karp might be giving non-holders a chance to buy into Palantir at a favorable time. This is a really out there speculation, and may not even be true. But whether this is true or not, for those who have been planning to buy Palantir, this could be seen as a window of opportunity for new investors to enter before the company reveals its latest financial performance. If the earnings report is positive, those who act now may benefit from a potential rise in the stock price. For those already holding Palantir shares, this could also be the right moment to increase their position. Karp's decision to sell may have been carefully planned to align with this moment, giving more people the chance to join Palantir's growth journey. However, here's something you need to watch out for. Behind the scenes, short interest in Palantir is still growing. Despite the recent stock surge, bears are increasing their positions. In September, Palantir's short interest was at 4%. Now, it's likely closer to 6%, especially after the recent jump in stock price. If Palantir beats expectations during the earnings announcement, it could trigger short sellers to cover their positions. This could lead to a quick rise in stock price, as more buyers would likely jump in. But until then, the growing short interest reflects the market's caution despite all the good news surrounding Palantir. This shows that even with positive developments, some investors are still betting against the stock. It highlights the mixed feelings in the market, where good news doesn't fully shake off the pressure from short sellers. However, the bulls see nothing but victories for Palantir. The company has had one of its most impressive quarters to date. Palantir secured several multi-million-dollar contracts, boosting confidence in its growth potential. The biggest win of all was Palantir's recent addition to the S&P 500, a major milestone that strengthens its position in the market. These achievements are seen as signs of a strong future for the company. While short sellers are betting against Palantir, the bulls are focusing on these consistent wins. They believe the company's success will continue, making it an attractive investment. The addition to the S&P 500 is especially significant, as it places Palantir in the same category as other major corporations, further validating its long-term potential. For the bulls, all these wins outweigh the growing short interest, giving them confidence that Palantir's best days are still ahead. To add to all this, Palantir's earnings report is set for November 4th, after market hours. With the stock's recent run-up, it's starting to feel like the market is pricing in a priced-for-perfection scenario as the stock approaches its all-time highs, as shared by a user on X. While the momentum is strong, and many still believe Palantir could hit $50 in the near term, it wouldn't be surprising if there's a slight pause before that happens. But this pause could be quick, and then a push to break $50 will be on the way again. Is this even possible? Well, back in 2022, when Palantir was valued at $30 billion, some called the prediction that it would become one of the biggest companies in the world crazy. But now, many believe that Palantir is on its way to being a $1 trillion company. And what's even more crazy is that some people even believe that the path of Palantir to $500 per share is part of what some are calling the AI revolution, and is very much achievable for Palantir. These bold predictions, like Palantir eventually becoming a $1 trillion company, aren't just hype. The consistent wins, major contracts, and its inclusion in the S&P 500 show Palantir's strength. Analysts are beginning to recognize what early investors saw all along: a company that is not only surviving, but thriving in the AI space. These predictions are signs of a company with solid fundamentals and a stock that has the potential to grow massively. The hype surrounding Palantir reflects real optimism about its future, driven by its continued success in AI, government contracts, and technological innovations. And there's even a huge potential contract for Palantir, yet again. Listen to this. As you know, the US economy was headed to a huge crash, but Jerome Powell managed to cool inflation without crashing the economy, something central banks rarely get right. Many wonder how he pulled it off. While traditional tools were at play, there's speculation that Palantir, known for processing massive amounts of data, might have played a role. The Federal Reserve's usual models help predict things like inflation and employment, but they're static. In contrast, Palantir's technology excels at digesting large, complex data sets, uncovering real-time patterns. While the Fed's data moves slowly, Palantir can deliver real-time, AI-enhanced decisions. This kind of precision could revolutionize how central banks make policies, shifting them from reactive to predictive. If Powell is indeed leveraging Palantir's tech, it's reshaping central banking into something much more powerful. This scenario proves that Mike Lee was right when he said there's no company like Palantir in the world. With its unique capabilities, Palantir is helping to transform industries, and this partnership could push it to even greater heights. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.